I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome to the show, Gary.
Thanks for having me on again, Jim.
The year started off very poorly on the major stock markets. Since the end of January, though, we've seen quite a charge. Are we going to hit a point of resistance?
Well, we're pretty close to resistance right now. I kind of anticipate that we're going to at least test those all-time highs, maybe marginally break above it, but we're getting a little late in this intermediate cycle, so I don't think we're going to break above it and then get a sustained move higher. We'll probably have to have another correction in the summer, and I wouldn't look for a big breakout and move higher until later on in the year. So I think we probably got, the majority of the rally is probably already in, and we probably still have a little bit further to go, but I don't think we're going to break through 2130, I think was the high, and then, go straight to 2500. I think we'll have a correction here this summer before we can do that.
Will we see something like last August 24th?
No, that was the move down in August of last year, and then again in February of this year. That was a 7-year cycle low, so that is a major multi-year cycle low, and so we shouldn't retest those levels again. And in my opinion, what we did was very similar to what happened in '98. You have a big corrected move that gets everybody basically on the wrong side of the market, gets everybody, anticipating a repeat of 2009, another bear market, and that kind of sets the stage for what I think will be the bubble phase in this. This bull market's been 7 years now. Over the next, I anticipate over the next, let's say 3 to 4 years, we're going to have another bubble phase. And that's been the pattern over the last 16 years is central banks, they print too much, they keep rates too low, and it, ultimately it causes a bubble or a series of bubbles. That's what happened in 2000, that's what happened in 2007, and I think it's going to happen again, maybe in sometime between 2018 and 2020, we're going to get another series of bubbles. So, I'm not in the camp that says we got a deflationary bear market. That's just people that are stuck in the past. They remember 2009. They're looking for that to repeat. It's not going to repeat. This is not the history of what has happened here. The history is that central banks stimulate too much and for too long, and they create bubbles. And then when the bubbles pop, that's when you get the bear market. So we've got another series of bubbles ahead of us. I'm positive. And then after those implode, then we can look for the next bear market.
Do you think the Fed will hike interest rates this year?
I'm going to anticipate they will probably raise at least 1 or 2 more times this year, probably in June, especially if the stock market continues to stay elevated near the all-time highs, and if the unemployment rate stays low, then I think they have to raise to remain, to have any retain any credibility.
That's interesting, to see a raise in rates when Europe and Japan, of course, have embraced negative interest rates, and that's forced people who had any kind of a large bank account to take their money out. In Japan, they're storing it at home in home safes.
Yeah, I also think that's what's going to drive, the next series of bubbles. Is like you said, all over the world we've got, either negative rates or, for all practical purposes, zero rates, and you've got central banks printing money with QE, and all that has to land somewhere, and I suspect it's going to land in the stock market first. I think that'll be where the first bubble will be, And then when that bubble bursts, then I think the next bubble will probably be in the precious metals market.
What's the outlook for the U.S. dollar?
Well, it's last time we talked, I said I wasn't very positive on the dollar. I was a contrarian at the time. Most people were and probably still are expecting the dollar to go to 110, 120. I think the dollar has probably topped. I think we put in a cyclical bull market top. I think the euro has probably put in a cyclical bear market bottom. Now, that being said, the dollar has dropped a long way for quite a few months here. So it's due for a bounce any time now. And by a bounce, I mean, it could last anywhere from 4 to 8 weeks. But I don't think the dollar is going to go back above 100. I think it will top before it gets to that level, and then we'll roll over and we'll start making lower lows and start the next cyclical bear market. And these have tended to run about 7 to 8 years, so I wouldn't look for a final bear market bottom until maybe 2020, 2021 maybe.
That's a lot farther out than a lot of people have said the U.S. dollar will be strong.
Yeah, a lot of people I think got fooled by that big rally in 2014, 2015, and it looked very convincing. But since then, we have formed what appears to be a double top, and I'm of the opinion that the dollar is probably starting another cyclical bear market.
And of course, for Canadians, a lower U.S. dollar means our dollar will be higher. Of course, the Canadian buck is tied so closely to the price of crude. If crude goes up 10 cents, the Canadian dollar goes up 1/10 of a cent. Will that change?
Yeah, that is correct, and I do expect crude to. I think crude has put in a final, a long-term bottom also. So I would think that the Canadian dollar is probably going up for several years.
On crude, we're over $42 a barrel now. Will that be sustained through the summer?
I think it will be. I'm looking for, if I'm correct, and CRB and oil has completed its 3-year cycle low, then we should start to make higher intermediate highs. So the first target would be a move above 50, and then I'm going to go out on a limb and say that oil's probably going to test $60 sometime this summer before we get a longer-term pullback. But when we do get that pullback, I don't think we're going anywhere near back to that $26 level. I think we'll hold well above that.
Raymond James did predict $60 oil for July. Maybe for once one of their predictions will come true.
Maybe. That's my target anyway. Like I said, I'll go out on a limb and make that prediction. We'll see if I come out right or not.
Is that because of higher demand? It seems the SUV has become the new darling of the auto industry, not just in North America, but in China as well.
I do think we are going to have a demand and a supply imbalance ultimately. I know right now everybody seems to be focused, on the supposed glut in oil, but markets turn before the fundamentals become apparent. And we've, last I heard, the rig count was at 40-year lows, and it's not going to be easy to just bring all that back online. So if economies do start to improve, and I think they will, as every country in the world is stimulating. So I think the economies are going to turn and start to accelerate again, where that's going to create a demand, and then you've got, a lot of damage has been done to the energy sector, and it's just not going to, all that supply that we had 2 years ago is just not going to be easy to come back online very quickly. So I suspect that some point this year we're going to see the supply glut dwindle away, and we may actually have a deficit start to develop later in the year.
Is that because shale oil deposits, once they're developed, tend to dry up faster than conventional oil?
That is one reason, and then also you've created that was a very severe bear market in oil, and that has damaged the psyche of the oil industry. And even if price comes back up to $60, these energy companies are going to be very reluctant to, dive back into drilling and expanding again. So I think that bear market has probably damaged the energy sector for a couple of years at least.
And of course, there's the brain drain. Once you've laid off these workers, a lot will find new jobs or just give up on oil totally. And where's your pushmasters or your engineers going to come from?
Correct. I think we're probably going to have to see oil, at a sustained level above $70 for many months or maybe even a year or two before the energy companies are willing to jump back in and start drilling heavily again.
We'll have more with Gary Savage right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Gary Savage. Gary, what's going to happen with the price of gold? It's had a nice rise when some people earlier in the year were predicting it would fall, perhaps below 1,000.
The last time we talked, I was also very bullish on gold. I thought at the time that we had probably seen a final bear market low, and I'm even more convinced of that now. I'm going to say I'm about 99% convinced that we've seen the final bottom in gold. That being said, we've had a tremendous rally off of this bottom. I call it a baby bull. We've had a tremendous rally during this baby bull, and the miners especially have gotten stretched quite far above the 200-day moving average. So I know a lot of people are looking for higher prices, and I am too in the long run, but I think we're probably going to have to do one of two things here in the next month or two. Price is either going to have to correct and narrow that gap between where price is at now and the 200-day moving average. I think at the recent top, the GDX was stretched 51% above the 200-day moving average, and that's just that's going to have to regress to the mean one of two ways. Either price is going to have to correct and move back down, or it's going to have to just churn sideways for 2 or 3 months and allow the 200-day moving average some time to catch up. So I suspect gold and the metals now are probably going to be in the doldrums for another, for the next month or two.
Is summer when the price of gold might come down? Because it seems to me gold is mined in places where weather is always a big factor. And you have nice weather in the summer, so your supply should go up.
That has tended to be the case. We usually get an intermediate cycle low sometime in the summer. Last year it came in July. I'm kind of expecting it maybe in mid-June this year, and it maybe perhaps could coincide with the re-exit. I think that's on June 23rd. That would be a potential spot for the euro if it's trying to top right now anyway to drift down and maybe put in an intermediate bottom on that vote on June 23rd. Consequently, that would be maybe a top for a dollar rally at that time. And when the dollar tops, gold usually tends to bottom. So my expectation right now is that maybe we kind of drift slowly down for the next month and a half to 2 months into maybe a bottom in June for gold and the metals complex.
Silver has made a big charge recently. Is that going to continue?
Well, kind of the same thing. Silver tends to get its big move towards the end of the intermediate cycle when everybody is really starting to get overly bullish. Then you'll get that big explosive move in silver. So I'm not really in a camp that says this is the beginning of something. Usually when you get that move in silver, it's the end of something. So I suspect silver's probably going to be the same. It's made a big move, gotten quite stretched above the moving averages. It will also probably have to either correct or just churn sideways for several months before we're ready for another big move up.
Would this be a good time to get into price averaging for silver and gold?
Well, I don't necessarily, buy every month. I tend to follow my cycles analysis, so I try to go in pretty heavy when I think an intermediate cycle low has occurred. So, at this point, I've taken profits on all of our metal positions, and I'm just waiting patiently. Like I said, I expect a bottom maybe in June, and usually I like to try and pick a bottom when everybody is very bearish, not when everybody's bullish. And right now, the sentiment in the metals complex is fairly bullish. So I would like to see us correct a little bit and see most of the traders become very bearish, and then when that happens, that's usually when you get your bottom.
Getting back to the stock markets, the FANGs were the darling for a while. Do you have to be a lot more choosy now than just looking for those techs?
Correct. The one area that I like, and that is still fairly depressed, is biotech. If we are going to have a bubble phase over the next 4 or 5 or 3 or 4 years, let's say, I think it has to be led by biotech. That's where the innovation is. I think that's where the world-changing inventions or innovations are going to come out of, similar to the personal computer and the internet in the 80s and 90s. So, and that sector is still fairly depressed. It's not going to be an easy ride up. Biotech took a hit today, but I do think over the next 3 or 4 years, biotech will probably outperform everything except probably the miners. The mining stocks, I think, will do the best of anything over the next 4 or 5 years. But I think the first bubble, when it occurs in the stock market, will be focused and led by biotech.
Is patience the key right now for investors?
If you're a long-term trader, I would say yes. I think, if you haven't already bought, maybe you want to wait till June. But if you did buy close to that bottom in January, I think you can just hold mining stocks for the long haul over the next 4 or 5 years. Biotech, I think you can buy, maybe not today, but once we get some kind of correction, maybe over the next few days, or maybe you wait till in the summer when the stock market corrects. But I think biotech will be a long-term hold over the next 3 or 4 years also.
Again, research is probably more important now than ever.
Correct. Now, I don't try to pick individual companies. Usually I just buy an ETF, and if somebody's really good at analyzing companies, they could probably find individual biotech companies, that has a good story and a positive outlook that could far outperform the ETFs, but that's not my area of expertise. So most of the time I'm just buying ETFs in all of these sectors, whether it be GDX in the metal sector or IDB or XBI in the biotech.
How much of an influence has China been with its effort to snap up every piece of gold it can find over the last 5 years?
There is some debate that maybe the bear market in gold was created so China could buy up physical gold and buy it much cheaper. So, I don't know whether that, one way or another, whether that would be true or not, but they are certainly buying a lot of gold.
Have countries made a mistake like Canada that just sold off all of its gold reserves?
Well, the one reason I could see for a country to hold a large gold reserve is in case of a currency crisis. There are 2 ways to stop the currency crisis. We had one back in the early 80s, and Volcker stopped it in the U.S. dollar by raising rates very high. I don't know that that's going to be an option now, since the world is so heavily indebted. I don't know that central banks can raise rates very much and not, just destroy the country's ability to service their debt. So if that's the case, then the only other way to stop a currency crisis is to back your currency with gold. So that may be why, China and Germany and some of these countries, Russia, are stockpiling gold, is on the, possibility that they may have to use it to back their currency at some point.
Some have suggested one of the reasons Canada might have sold off its gold is that because the country produces so much gold, the government could actually put a tax on the gold companies, saying whatever you take out of the ground, we want 10% of that or 15% of that directly deposited in our vault.
Very well could be.
Gary, thanks a lot for chatting with us.
Thanks for having me on.
My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.